What's up, everybody? It's Sunday. That means the Forex markets are closed, but that also means that we have some analysis to do. If you don't know who I am, my name's Nick, and for the past little while, I've been super interested in the Forex market, what it is, how it works, how to trade it, and how to become profitable. So I've been trying to learn everything I can about how to trade it so that one day I too may become profitable. So if you're interested, just sit back, relax, and let's tackle some charts. Basically how it works is the Forex markets are open 24/5, so 24 hours a day, 5 days a week. On the weekends, it closes, which makes the weekend perfect to take a look, analyze the charts, and see which markets you're interested in trading for the upcoming week. Yeah, so you can see over here on the side, I have a list of all the markets that I like to look at. A lot of them are the USD pairs, some of the strongest and best to trade. And just move me over here. I'm just gonna start at the top, try to work my way through some of these markets. And I'm gonna do my best to be explaining my thought process as we go along. So our first pair, we have USD AUD. That's the US dollar against the Australian dollar. I'm gonna start by going to the weekly time frame just to get a good idea of where the market's at. So we can see here, and let me just get rid of some of these. Right, we're in a downtrend, come down just at the bottom. Let's see. Right, so we're pretty close to a different area of resistance. You can see in this purple box, we see price bounced off this purple box there and here multiple times. And we're just right back in that zone here. So I'm definitely interested in this market pair. If we switch back, if we zoom in a little, say the 1 hour time frame, right? So we can see we're bullish on the 1 hour. We've gone through this fair value gap here up into this ascending triangle here. So basically what I'm looking for with this is once it opens, we can be monitoring the charts. In theory, what should happen is price should come through here and either break structure to the downside, which in that case, I'd wait for price to come back up to the line. Once it hits the line, then I'll enter a sell position and ride the market down. Or it's more likely, because we have this bullish trend before the triangle, is price will break structure above, which in that case, once it comes back to the line, then we enter a buy position and ride the market for a profit. So yeah, that's USD AUD. Definitely interested in that pair. I try to pick like 3 or 4 pairs for a week, and then I'll put them at the top here and then just drag this little guy up, just so that I'm only looking at the pairs I'm interested in trading. Otherwise, it's a lot to look at. Okay, so we'll go to the daily. Wow, GBP USD. If you don't know what these time frames are, basically you have the weekly, the daily, 4 hour, 2 hour, so on and so on. And each one of these candles represents that time span. So if we're on the daily chart, 1 candle equals 1 day. So in 1 day, price started here and closed there. On the 30-minute chart, each one represents 30 minutes. It's pretty straightforward. As you can see, we're in a big downtrend with no necessary signs of slowing down. We do have a double bottoming pattern right here, which could be interesting. As you can see, it went back up, but then it reversed not too long after. So not super interested in this pair at the moment. If we zoom out, we're kind of just in the middle between these two liquidity zones. So we have one here, right? Price comes down, comes back up here, people sell, comes back down, they buy, sell, buy, sell. So we're kind of halfway through. Maybe once price reaches down here, I'll be interested. But for now, not really. Moving on, just taking a quick peek at these. This guy, we got lots of stuff going on. Just gonna clean that up for a second. Okay, so we're on the weekly. You can see for the past couple weeks, we've got these 2 liquidity zones, one up here, one down here. I'm gonna zoom in a bit to the 4 hour, see where we're at. Okay, so we're in a bit of an uptrend. Interesting, we have these 2 EMAs. We have 200 EMA and we have the 55 EMA. An EMA is an estimated moving average, which means it takes all the past data over that amount of candles. So the 55, it'll take the last 55 candles and make an average price. So over 55 candles, that's the trajectory it's taking. Typically what happens, what you'd be looking for is when a shorter EMA crosses a longer EMA, that's a good indicator that price has moved in that direction. So because the 55 is about to cross above the 200 EMA, that could be a indication to buy. Similar as up here, you can see when it crossed down, that's a good time to sell. And you can see the price drop way down. Interesting though that we have our MFI, which is at the top This indicator tells you if it's near the top, it might be a good idea to sell. If it's the bottom, you might be looking to buy. The reason it'd be at the top is probably because of this area over here, where you can see if we zoom in and go over to our line chart, we had price touch this area multiple times. One here, one there, another point here, and then if we zoom out, you can see price is right back up at that spot. So this area could act as an area of resistance where price will bounce back off and go down, or it could break structure and continue to the upside. But all in all, not a bad market. We'll keep this one in mind. So that's basically what I'm doing. I'm just looking at the chart, seeing where we were in the past, seeing where we are now, to see if it would be a good idea to be looking to buy or sell that one for this week. I'm gonna go through a few more and I will catch up with you once I'm finished. Okay, so here we actually have a super interesting spot. We can see on the daily time frame, about maybe 2 weeks ago, we had this huge fair value gap. Price had a massive push. We have 1, 2, 3 candles, and we can see that candle number 1 and candle number 2, the wicks don't cross. So that's fair value gap. Now what's interesting about that is that typically means that price is going to go up and then come back down that spot before continuing up. Now obviously it is a longer time frame, so things can change, but when we zoom in, you can see we have an even stronger fair value gap where price never came down. We can zoom in even further to the 15-minute chart. Right? You can see here on the 15-minute chart, again, within that fair value gap, within the fair value gap, we have another fair value gap. What that means is all of a sudden this area becomes a super strong support and resistance. So I'm definitely interested in looking at this market. Now, it was quite some time ago, so it's possible that it's no longer as strong as it once was. However, the fact that it's stacked like that and only just came through it tells me that this would be good. This is perfect. Exactly like I said. Price came down, it bounced off, but it had a retracement. And then what happened? Came down, blew right through it, retraced back to the top, blew through it again, came down. It just keeps blowing through that zone. So what we're looking for is we're looking for price to come back up to this point, and we want to see it retrace once it hits that point. As soon as that happens, we enter the trade because we know that's our zone, that's where we want to enter, and then we watch. But yeah, that's all I'm doing today. Since the markets are closed, we can't actually buy and sell. So all we can do is analyze the markets and see which markets we want to trade in the upcoming week. If you found this interesting, feel free to subscribe, like, follow, whatever the heck it is. And let me know in the comments what kind of videos you'd like to see. Thanks for watching. Keep up the good work.